right, guys, I hope you're doing well and you are busy studying as paper two is already just near. So, I have received a couple of requests, and people are asking me, Mr. Simi, can you help us to do some of the questions that are on cost accounting? So, I'm not going to do the entire question or the entire topic per se, but I'm going to address certain questions which were sent to me. So this is an extract from the Eastern Cape prelim paper for the year 2024, and my focus is on 2.2. And on 2.2, I'm going to go to 2.2.1, where here we are going to calculate the net profit. You can see here it says calculate the net profit for the year 2024, and it also wants you to do the break-even calculation. So for this question, I'm going to do everything, but in the next questions, I'm going to be selecting only the challenging or the tricky parts. So if you're to calculate the net profit, we would come to our information. Very important that when you read your question, read it very calmly, but read the question and then look at the information that you are provided with. What is very important is to know that you're calculating for the year 2024. Okay, so in 2024, we have produced 18,000 pairs of sneakers. So we'll come here and then we would say 18,000 over there. So it will be 18,000 pairs of sneakers. And you can see that each sneaker was selling at 980. So you'd multiply that and then you'd say times 980. Okay, let's see. So I'll come here, then I'll say 18,000 and then I'm multiplying that by 980. And then that will give me 17 million rather. To give me 17,640,000. This is the income that would receive from the sneakers. And here we're given total cost to make it very simple. So you have your total variable cost and your total fixed cost. That means if I take my total income here from the sales of sneakers and then I subtract the total cost, which is my 14,040,000. If I take that one out from there, so I'll come and then say my 17,640 minus the 14,040,000. I would remain now with my 3.6 million. So I'll remain with my 3,600,000 like that. That would therefore become my net profit. Okay, so remember that the examiner can test several other things, such as your break-even point, which we can see here. And I'm going to do that break-even point, which is the second question. Now, we know that to calculate break-even point, it is your total fixed cost over your selling price per unit minus your variable cost per unit. This is how we get our break-even point. So we're going to come here and we're going to say how much is our total fixed cost. Our total fixed cost is over here. That is my 3.6 million. All right, so I'm going to take my 3.6 million and then I'm going to divide this by the selling price per unit. The selling price per unit is your 980 minus the variable cost per unit. All right, and my variable cost per unit, it's given here. My variable cost per unit is 580 over there. Then I say 580. All right, so if I put that in my calculator, I'm going to end up with 3.6 million, and then I'm dividing that by 400. In other words, I'm simply saying 980 minus 580, that is 400 over here. Okay, let's see on the calculator how much that is going to give us. So it's my 3.6 million. That is my total fixed cost. All right, which is what I have here. All right, so I'm going to say my 3.6 million, my total fixed cost, and I'm dividing it by my contribution per unit, which is selling price per unit minus variable cost per unit. And that's going to give me 9,000. So my break-even point is 9,000 pairs. Now, remember, the examiner can test this in different ways. They can say calculate the break-even point, or they can say prove that the break-even point is 9,000 pairs. They just want to see you breaking down the calculation. So there are different ways in which the examiner can test you on the break-even point calculation. Okay, so I'm just going to quickly go on to 2.2. 2.2, and try to answer that one as well. That is my 2.2.2. And let's see what we are being tested. It says, NASI is not satisfied with the result of 2024. Explain and provide one reason with figures or calculations to prove why she should be much more satisfied with these results than she was with the results of 2023. So already here, I know there has to be comparison. I have to compare my 2023 and my 2024. It's very important that you know, once you have such a question, you have to bring in comparison between the 2 years in question. Okay, so let me start with the first point. All right. So with the first point, I'm now going to say, here is my 2023 and here is my 2024. Okay. So in 2023, my break even point in 2023, I would say the break even point, the break even point, the break even point remember here, the break-even point here is 9,000 here now. The break-even point is 9,000. So it is decreased. The break-even point has decreased from 10,909 units, all right, um, to 9,000 units, all right. And you can see that here I've mentioned the break-even point, but here the number of units produced has increased from 2023 to 2024. Okay, number of units produced has increased from 12,000 units, to 18,000 units. Okay, so what I'm simply saying here is, remember, when your break-even point has decreased, that is good for the business. And when it increases, it is not good for the business. So the break-even point has decreased, which is very good for the business. Hence, he should be more satisfied with these results. So his break-even point has decreased, and at the same time, the number of units produced has increased. So that is a good point for you to mention. The next point that you will also mention is profit. Okay, so if you come here, you will see that when you're calculating profit in 2023, if you get the difference here between 12,000 and 10,909 units, so you say your 12,000 minus your 10,909, that will give you 1,091. So in 2023, we had a profit of 1,091 units, but in 2024, would say 18,000, that is the production, minus the 9,000, which is the break-even point. So we had 9,000 units on profit. Okay, so in 2024, we made profit on 9,000. So my second point is, in 2024, all right, the business made profit. The business made profit. The business made profit on 9,000 units. On 9,000 units, while in 2023, the business made profit only on 1,091 units. That's the second point. Now, the second point, I'm bringing in the aspect of profit, If I want to stretch it further, I can come now and give the third and last point. And the third and last point has to do with the units that have been sold, Okay, so you can see that in 2024, you've sold 18,000 units, which is about 6,000 more units than in 2023. All right, so you can say in 2024, the business has sold 18,000 units, um, which is 6,000 more, which is 6,000 units more, that's 6,000 rands, which is 6,000 units more, which is 6,000 units more than the units sold in 2023, which is 12,000. In other words, you can bring this as a percentage where you now say the 6,000, which is the difference, 6,000 divided by the units sold in 2023, which is your 12,000, divide that by 12,000. You multiply that by 100 over 1, and that will give you 50%. So the business has sold 50% more. The business has sold 50% more in 2024 than in 2023. So the owner should be happy in this particular case. And then I'll now come to the last question, which is very interesting, which was the main reason for doing this short explanation, which says calculate how many extra pairs of sneakers she would have to manufacture to increase her profits by. Get the question here, because I'm going to go to, I think, about 3 or 4 other different past prelim papers for the year 2024, whereby this question is structured differently. That was the main reason of doing this video. I've done the first calculations so you can just understand how to do them. But this question here can be tested in different ways, and I want to show you how to do this particular question. So my focus is now on 2.2.3. And on 2.2.3, the question is saying, calculate how many extra pairs of sneakers. How many extra pairs of sneakers? So when this question comes like this, we are given the profit already. We are given the profit already. What this question simply means is we have come to a point whereby we have already achieved our break-even point and we're now producing above. In other words, certain costs are already covered. Your fixed costs are already covered in this case. So, in other words, you have already achieved your break-even point. Remember, your break-even point is 18,000 units. And at this point, remember, at the break-even point, there is no profit. At the break-even point, there is no loss. And what they want to achieve is a profit. And remember, if you achieve below break-even point, you are going to make a loss. But if you achieve above the break-even point, then you're going to make a profit if you achieve above. So it simply means our break-even point has already been achieved. So remember, our total fixed cost in this case have already been taken care of. So we would therefore make it very simple, where we'll take the profit that we want to achieve. Then we take that profit, which is your 400,000. We take the 400,000 and we divide it by what we call the contribution per unit. So let me come down here and do it properly. So I'm going to take the 400,000, and I'm going to divide it by your selling price per unit, which is 980 minus your variable cost per unit, which is 580. So in other words, it is simply again your 400,000, and then we are going to divide that by 400, and then it will give you 10,000 units. So the answer therefore becomes your 10,000 units. We will have to produce 10,000 units if we are to increase the profit by 400,000. That was the main reason of doing this particular video. Okay, so let's see. I'm going to do again another video as we go again to another prelim paper and we try to answer this very same question. Until next time, enjoy your studies, guys. Don't forget to do your production cost statement. Don't forget to do your adjustments. Don't forget to do your factory overheads. It is very important to know how to reverse certain errors and to do the proper calculations. Very important that you focus on your production cost statement calculations. Until next time, cheers, goodbye, and I'm out.